Well, good morning, everybody. This is William Ware. I'm a mortgage advisor and business lending advisor with 4MG Mortgage. We're a small brokerage based out of Miami. I, of course, am here in Central Florida. The company is also licensed in Colorado, and we are expanding further, but I can't really talk about that just yet. So I'll update you when that happens. I help families, investors, and business owners reach their goals through smart financing. So, oh, baby. Let's see here. All right. So a little bit about me. I'm a veteran, family man, amateur golfer, not like Wayne who wants to be a professional golfer. uh, Dad to two asshole dogs and a cat, and a husband. I'm a student. I am 2 months and 10 days away from graduating Florida Institute of Technology with my master's in business administration. Um, Thank you. And yeah, just striving to improve myself and those around me. So, a little bit about how I got into the mortgage industry. Actually, June 26th, 2024, I was in a motorcycle accident. I fractured three of my vertebrae, so I was on medical leave from work for 3 months. And after about 2 weeks, I got really bored. So I started scrolling through TikTok as you do, and I came across a gentleman named Braden Shaw, who makes videos about mortgage lending and different financial things. And I was like, mortgage origination. That sounds cool. Sounds like I can make a lot of money fast. Newsflash, that didn't happen. But the idea was there, right? So for the rest of my time on medical leave, I got my license, did the classes, all that kind of stuff. And pretty much like the day I went back to work is the day they granted me the license in the state of Florida. And also as a result of that, my wife decided that we were moving back to Florida from Georgia. Before I got in the mortgage industry, I worked in defense contracting, basically doing the same thing I did in the Army, just as a contractor for the government instead. And I did that for about a year after I moved back to Florida while I was building up the mortgage business. But what you see on the left hand side is what the reason I'm still doing it. The reason I left my full time job to do it and make this my full time job. It's the impact you have on families and business owners. Anybody. So it's a huge financial investment, probably one of the biggest you're gonna make in your entire life, right? So being able to be that person that they trust to guide them through the process and make recommendations, things like that, it means a lot. And it really, you guys can see from like my YouTube channel, I did an interview with one of my client couples. They're first time home buyers, and they actually had a really complicated process due to some specific things that aren't normal. And they talk about the process and how they felt through it, and that's really what the point of it is, the impact that I have, and the fact that even with all this back and forth and things changing, they still trusted what I was saying and went with what I recommended was the best option for them. So, oh, went too fast. So I do residential mortgages, pretty much anything you can think of: FHA, VA, conventional, USDA, non-QM, self-employed business owners for bank statement loans, profit and loss statements. I even have one that I'm working on right now that it's a business owner, but they don't qualify for traditional loan programs because they've been in business only for a year and they're from another country here on visas and a different line of work. But I found them a loan program that doesn't care about any of that. They care about uh, the property and do you have the 20% down. They don't look at income or anything like that. So I really do have solutions for just about anybody. So if you or somebody thinks that maybe it's not attainable for them in their current situation, I think it's always worth a talk. It's free. You just call me and we'll walk through it and see what we can do for you. Oh, wrong way. And I also do commercial loans. They do kind of overlap with residential, but they're more built for investors through like fix and flip, ground up construction, DSCR, debt service coverage ratio. It's usually built around either an investment property that you're going to buy, fix and flip for the fix and flip ones and sell for a profit, or it's so you can buy a rental property, and then the rental property just has to cover the cost of the mortgage. We have other investment loan options, but these are the main ones that we do a lot of. And then business lending. We've made a big expansion into business lending to help business owners with their business finances. So we have SBA loans, working capital loans, equipment financing, lease build outs, just about everything under the sun. If it has to relate to real estate or business, we probably have an option. Can't guarantee it, but and on October 25th, I will be in Orlando at the Commercial Brokers Lending Association annual convention. So hopefully we can build some more relationships and more loan options into our programs for you guys and any of your clients that may need them. But enough about that. You guys hear my spiel every week. So this is something I don't really ever bring up. It's my social media. That's where I drive most of my business from. I don't cold call realtors. I don't cold call individuals. My business comes from people that I know and then from social media. So I'm on pretty much every platform there is. I focus heavily on educational content about, home buying, commercial loan programs, SBA loans. One of my more recent videos on YouTube here, it's SBA loans explained for 2025. Goes into all the SBA 7A loan, who can qualify, how much you can get, all that kind of stuff. So I've gotten good feedback. A lot of people say it's very useful for them. So I continue to do that. I'm on all the interruption platforms with little short videos on here's a home buying tip today, here's a SBA loan tip today, all that kind of stuff. And I try to post, 1 to 2 times a day. Um, but part of what I'm trying to do is I want to work with other people like you guys that have businesses and things like that, and do things like hidden cost of home ownership videos for you contractors or home inspectors, and just other business spotlight videos to kind of bring in some other people and help everybody else grow with me. So if you're interested in doing anything like that, let me know. We can put something on the books. As you can see, I have a little tripod thing that follows me around when I move. So, and I'm gonna get a drone too because I want to do like rooftop videos. So, be pretty cool. We'll see. So if you know anybody looking to buy, refinance, invest, expand, liquidate, renovate, or anything else residential, commercial, business lending wise, let me know. I probably have options for them. And that's what I got for you guys today. It's my contact information, and that's my social media account tags. Um, like I said, I'm an amateur golfer, so my social media tag or brand is the Florida Mortgage Caddy. Um, that's my well, she took my website's up there now. It was at the bottom before. Uh, it's up there now, and it is thefloridamortgagecaddy.com. I just published it last week, built it from scratch, so I appreciate some feedback if you guys have anything on it when you have some time to look at it. But yeah, any questions?
You had one earlier under commercial, DSCR. What does that stand for?
Debt service coverage ratio. So that's the one that I was saying. The mortgage has to be covered by the rental of the property. And most of the time they're looking for minimum 1 to 1, but a lot of lenders do have it to where you have to have a little bit of a gap in case something happens with the property.
Question.
Yeah.
What if you own the property outright and you want to start renting that one? Can you get that
Yep.
particular loan against?
Yes, so you can get a DSCR cash out. So it's just like a cash out refinance. You can go up to whatever the loan limits are for specific banks have a little bit different requirements, but you can do a DSCR cash out, pull that cash back out, and then you just start paying the mortgage like you would on a normal one. Same way you'd refinance your house.
So are you guys packaging and then reselling, or will you keep the loan yourself?
No, so I'm a broker. What I do is we have over 25 different lenders in our network currently, and we're adding more every day. So we go out and we can price it out with all the different banks and see who's got the best rates, the lowest closing costs, most favorable terms, all that kind of stuff to find the best deals for the clients that we're working with.
And then who does the loan servicing?
The bank, whichever bank, we collect, as a team decide. So it's not just me deciding. I present the options to the client. I'm like, hey, this has a little bit lower rate, but you're going to have to bring $5,000 more to the closing table versus this one, and then kind of give them, it's their choice at the end of the day. So
Well, in the mortgage lending industry, how they make their money is they sell the servicing. So I used to work in mortgage lending years ago. It was fascinating to find out, because you go to the closing table, you're dealing with all this set of people. By the second payment of your mortgage, you've got a whole new set of people you're working with because they sold it.
Yeah, depends on the bank it gets sent to. There are a few, but like the big one that we use, it's the biggest in terms of like supporting brokers in the country. It's called United Wholesale Mortgage. Um, they actually are creating a servicing department so they can service more loans and not have to sell them off right away. And I've seen that kind of transition with a lot of the banks. I know my personal home, I financed it with Freedom Mortgage last year, and they never sold it off, but they're infamous for selling it off. They still service mine for whatever reason. Mine's special to them, I guess. I guess. So
I've seen a lot of those this year for taxes.
Yeah.
Because I get the mortgage interest statement.
right. Yeah.
Yeah, and that's the question I had because when I bought my house like 3 years ago, I had it with United Mortgage, wholesale mortgage, and then suddenly I don't have it with them, and then I didn't know who I had it with, and then as soon as that changed, and then also the same thing happened with insurance like that. So now I had to like scramble and get a new insurance broker as well. Otherwise, like there's gonna be a problem with the house. So what causes that? Like no one ever told me like suddenly it had nothing to do with me because I was paying my mortgage and then suddenly they're like, oh, we're not doing this anymore. Then someone else, and then I didn't even know how it got handed off to someone else and all of that.
So it's like Karen mentioned, that's how they make their money. Largely, they don't want to wait the 30 years to get all the interest money when they can go. And it's a clause in pretty much any mortgage that you do that they have the right to sell it off in the secondary market, and they'll sell it to another bank that has the money that wants to freeze their money up on that loan to collect the interest for a lesser fee, but they get the money up front, so they get to save a little bit there. Um, but yeah, they just do it because most banks don't have the capacity to service every single loan they have. That would require billions, probably even trillions of dollars for a bank to have at their disposal to be able to service every single loan they write. So that's why they sell them off, because they just don't have the capacity.
And different mortgage companies, they kind of have a fit in how much of the interest they're going to collect. Because as you pay your mortgage down, the amount of interest goes down. So certain mortgage companies will say, we want that early, high interest rates, where some of them will take that real low as you get close to the end of your mortgage. And so there's different fits in there where different companies are comfortable being in terms of return.
I will say this as just a word to the wise for any homeowners out there. If you are in the middle of a project where you're like the insurance company is involved or something like that, I had back when I was doing the roofing, I had a customer that the insurance company approved their roof and sent the money to the bank. They had sent the money to the bank. We were ready as a roofing company to receive the funds from the homeowner. That same week, they sold the loan.
Oh,
So
that's fine, where the money went.
yeah, so my homeowner was calling the bank saying, what's going on, and wouldn't get any response. Couldn't even talk to anybody. Had no response. Had no idea what was going on. Almost a month later, they found out that the loan had been sold. Now the money's in limbo. They had to get the money transferred from the insurance company, had to move it from this company back over to this company. It was a mess. So if you're ever in the middle of a big project involved with other people paying the bank the money, make sure you stay on top of if your loan's being sold or not, because it could become a real, just a whole lot of them. mess for you, you know, just the timing is everything, you know?
Yeah.
But going back to this, but like, how can you do anything about it? Because they're, like, they just randomly buy it and then
Right.
if you're.
Yeah, you
kind of-
can't-
You can't stop it.
You've already sold it, then what? Like, what do you?
Then you,
And you have no say in it.
Are you talking about Fannie Mae, Ginnie Mae, and Freddie Mac in the secondary market?
secondary market is anybody that buys a loan that they didn't originate. So if I originate a loan and Aaron's bank buys it, they bought it in the secondary market, in the secondhand market.
I've had mine sold from like local banks in Missouri to like
Yeah.
on the West Coast, man. It's whatever bank
Yeah.
will take it.
The primary market is the bank that gives the first loan. The secondary market is whatever banks buy it after that.
Does it often go more local? Because like I had United, like I said, United Mortgage, wholesale mortgage, I think is a much, like more, I don't even know if it's in this state, but then
No.
agents took it over, so like.
I honestly, I don't work for the banks, so I don't know how they, that's like a C-suite level probably decision on how they strategize doing that. I just know that they probably do it to whoever is going to pay them the most money up front. So, I mean, they're in the business of making money, or else they wouldn't charge 8% interest, so. Yes.
Can you share with the team what you would offer for a new startup?
Yes.
New business?
Yeah, so SBA lending covers a lot of startup stuff as well. Included in some of the SBA lending and business loans I have like franchise fee funding, which is not widely offered. I don't know if like regions offer something like that. Usually, if you get a franchise, you got to come up with the $70,000-$80,000 fee on your own. We got loan options for that. We do startups, so we can help with equipment purchase, real estate purpose, all that kind of stuff through SBA 7A and 504 loans. I also have a investor-backed lending referral partnership type deal. That's kind of like my back pocket thing. If they don't fit in one of these boxes, maybe the investors will decide to pick them up. So I do startups, equipment purchase, land purchase, lease build outs. As long as you have a solid business plan, a solid growth plan to show what you're going to use the money for, that's usually all going to be the deciding factor. So, you got to know what you're doing. So you can't just open up a company and say, I'm going to do this, and say, hey, bank, I want $100,000. That's not going to happen. So you got to have a solid plan in place that you can present on paper with estimated financials and all that kind of stuff. So. All right. Well, thank you guys.